This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. This is Bloomberg Businessweek Daily. It is another Monday. It's a Monday in July. It's raining in New York, but we've got sunshine with us.
Exactly.
In the way of Emily Grafeo.
Thank you.
So nice to have you.
I wore yellow for the sun. Bring a little bit of that positive energy into this Monday after holiday weekend and a rainy one in New York at that.
It's pretty gloomy out there. Not so gloomy, I feel like, though, when it comes to the trade today, although we're definitely off our best levels of the session. But once again, Emily, it feels like tech names in particular, semiconductors are up about, 2.3%. They're back in favor.
Yeah, snapping a two-day losing streak here, at least set to snap that. The NASDAQ 100 up about 1%, but S&P 500 also in the green. Even small caps are in positive territory today.
I heard you say earlier, I think it was on Surveillance with Tom and Paul, that is it SpaceX that goes into the NASDAQ 100 tonight?
Yes.
Okay.
Mm-hmm. That's coming later today.
That's at play. We're going to talk a lot about semiconductors this hour, too, because you have SK Hynix. They're kicking off their $28 billion U.S. listing. So we're thinking a lot about memory chips. It also, I feel like, Emily, plays to the AI narrative. It was all about NVIDIA for such a long time, and now we're looking at all the memory names. And so that narrative, that invest, that spend kind of continues to evolve.
And of course, the macro is still very important here, Carol. We're going to talk ahead this hour about the latest economic and business commentary from the Fed, regional banks, and a lot of comments coming out of D.C. from global leaders at the IMF annual spring meeting.
Yeah, we're going to get into that. And I also thought there was an interesting story in the Bloomberg. It definitely caught our attention this morning on why President Trump's war, we're talking about the U.S. war in Iran, why that means higher global interest rates. We're going to see that for years to come. So we've got that. And then kind of I feel like this rolls into it, and that is oil prices, which has been one of the big concerns. We've seen higher oil prices, Emily, right, in terms of this war. They've come down a lot since mid-May, but we're going to get into Saudi slashed in its main oil prices. Saudi Aramco, right, this massive company. I remember the list years ago. We couldn't wait. It was just anything and everything that people could talk about, and the really role of Saudi Arabia and this company in particular globally. But it feels like it's a different era.
It's just been incredible to watch the path of oil prices over the last couple months. It's been up, it's been down, and now, as you said, we are back to levels that we haven't seen in several months here.
Dare I say they're sliding? Okay, it's really lame. Okay, let's get to it, though. Let's get a look at the trade on this Monday. With us, of course, is Charlie Pellet. Charlie, take it away.
Hi, thank you very much, Carol and Emily. We have got the Dow, the S&P, NASDAQ, as you both mentioned, solidly in the green right now. We've got tech giants driving today's stock gains, specifically semiconductors. Yes, NASDAQ up by 1%. The NASDAQ 100 index up 1.2%. But the big story, what's going on with the SOX? It is up now by 2.6%. The SOX, of course, the Philadelphia Stock Exchange's semiconductor index. S&P keeping it all in context, up by 51 points, up 0.7%. With the Dow up 42, Dow Industrials up 0.1%. Little change there. NASDAQ up by 1%. All of this with the VIX trading below 16, a 10-year at 4.48%, with a 2-year 4.12%. Gold is down 0.4%, 41.58 the ounce. And West Texas Intermediate crude back in the red. WTI falling to 68.52 a barrel, a drop there of 0.2%. Two super tankers hauling Saudi crude are heading to the U.S. for the first time since February. It is a step in normalizing global energy flows after the reopening of the Strait of Hormuz. Oil majors, they are trading lower. ExxonMobil, little change now, down under 0.1%. Chevron is down 0.5%, and ConocoPhillips lower now by 0.7%. Recapping, S&P up 0.7, and for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. I know you mentioned an IMF meeting. You apparently were looking at something old. I just want to clarity that
there's no IMF meeting.
It's a Monday in July after a long holiday weekend, and it's been hot, and now it's rainy. So Just be patient with us today. And I got something to add to it, to maybe add to your doom and gloom, because President Donald Trump's war against Iran may be over. We know that. We continue to see movements towards things calming down. Things have calmed down, let's be fair. But the repercussions for global monetary policy are here to stay. And this is certainly something to keep in mind. Let's not forget, Emily, we've got the Fed minutes from the most recent FOMC meeting, the first one overseen by Kevin Warsh. That happens on Wednesday.
Right. A little dated, but like you said, the first with Warsh. So we'll get maybe more insight into this new era, this post-Powell era of the Fed, but an era in which there is supposedly going to be less forward guidance from the Fed in the traditional sense that we're used to.
So do we get anything on inflation and kind of the impact of the war? So let's get to it, because our economics team really writing about this war's impact, certainly on global monetary policy. Let's get to it. In our Bloomberg News Washington, D.C. bureau, with us is Bloomberg Economics chief economist Tom Orlik. Hey, Tom, good to have you here with Emily and me. Happy Monday. We're all trying to get back into business. Tell us about the work that the Bloomberg Economics team did specifically, and why the world will continue to feel the repercussions of the U.S.'s war with Iran, President Trump's war with Iran, to be fair, and how that plays out in terms of monetary policy.
Thanks, Carol. Great to be here. So, in normal times, if there's an oil price move, central banks will try to look through it. Oil prices go up, oil prices go down. Generally, it's just a one-off. Generally, central banks can't do anything about it. So they tend to try and focus more on underlying dynamics. This time round, though, that's not really been the case for a couple of reasons. First, the oil price shock from President Trump's war in Iran has been really, really big. Prices were about $65 a barrel before the war started. At their peak, they rose close to $120 a barrel. So really big move in oil prices. And then, of course, we are still kind of not yet fully recovered from that post-pandemic inflation shock. Prices never really got back to central banks' 2% target following the COVID pandemic. And what that means is that this time around, central banks don't really have the luxury of looking through the oil price shock. So what we saw was, when the war started, rhetoric from the Fed, the ECB, the Bank of England, and other central banks became noticeably more hawkish. And even as we've had that welcome news that we have a ceasefire, that oil is flowing through the Strait of Hormuz again, even though we now see oil coming back towards $70 a barrel, well, that hawkish rhetoric hasn't really gone away. So at Bloomberg Economics, our latest forecasts suggest actually we're looking at a higher profile for central bank rates heading into the end of the year and into 2027.
Yeah, Tom, why does Bloomberg Economics disagree with some of the market pricing? Not in all the countries, but Canada, ECB. It looks like you guys are forecasting more hikes than what markets are pricing in. Explain the difference, that divergence here.
So, I mean, if there weren't a range of views, Emily, we wouldn't have a market. So
of course,
we're delighted to find ourselves having a difference of opinion with some of the other really smart economists in the market. If we focus in on the European Central Bank, I do think there's a genuine uncertainty here. The ECB has hiked once. They've signaled that there's a chance that they're going to go again. But really, I think that trajectory still hinges a lot on how we see the Iran war playing out. If the ceasefire holds, if we see oil prices coming back to $65 a barrel, or even perhaps lower as we get back to that global oil oversupply story, I wouldn't be surprised if we saw expectations for that second ECB hike dropping out of the markets.
Well, and to be fair, and just got about 30 seconds left, we're going to talk with Ellen Wald, who wrote a book about Saudi Aramco about 8 years ago. It is interesting to see what that institution has done in terms of oil prices even today, in terms of cutting them. So it does feel like the impact might be diminishing somewhat, Tom. And if it does, that kind of maybe makes you guys think differently, perhaps, going forward, just quickly.
So I think Saudi are certainly one of the producers that can operate at really, really low oil prices. So interesting to see that dynamic right now. I think the other thing to keep in mind is that even as we hope for the best in the Middle East, there are still some pretty significant differences between Washington, D.C., Tehran, and of course the interests of Prime Minister Netanyahu in Israel. And what that means is that whilst the trajectory for oil prices right now is good for inflation, good for central banks, I think it's far from guaranteed we're going to stay on that trajectory in the weeks and months ahead.
I think that's super fair. I mean, considering the ups and downs, the 2 steps forward, 2 steps back that we've seen, and we certainly know that Iran knows it has a very powerful tool when it comes to shutting down the Strait of Hormuz. Good stuff, as always. Tom, glad you could jump on with us. That is, of course, Bloomberg Economics chief economist Tom Orlik there in our D.C. bureau. We think about things that move markets, global rates, global inflation, no doubt about it. So, too, is the recent run-up and focus that we've seen on chip stocks, and that's where we kind of want to go right now. The stocks has been on a tear this, as you know, but there's been, I feel like, the narrative changing a little bit as the focus goes from the likes of something like NVIDIA to more of those memory names.
Yeah, memory becoming a huge trade right now. And with the SK Hynix U.S. listing later this week, it's just bringing that trade further into momentum here, Carol. We have 2 great reads on the group today. As you said, SK Hynix debuting a U.S. listing on Friday, Samsung reporting later today.
Yeah, so some good stuff. The first person that we thought of that we wanted to talk about with this is Ed Ludlow, who came to town because of this massive listing. He is here, of course, he's host of Bloomberg Tech, Monday through Friday at 11 a.m. on Bloomberg TV. Hi.
Hi.
I mean, this is, first of all, size and scope. This is a big deal.
Yeah, it's a big deal for like lots of reasons. One, it's the biggest U.S. listing of a foreign entity ever, like, you know, $28 billion deal. But like the story is a lot more nuanced than that. It's like the AI investor knows that memory is important now. They've come to understand that there aren't enough high bandwidth memory chips. Those go into the data centers embedded around the outside of the GPU. And SK Hynix has like 57% share in that market. But from a sort of valuations perspective, they're kind of seen as the like discount name to Micron and Samsung. And so they just want a piece of that like US investor story. If the US investor loves AI so much, then SK Hynix needs to be here. It's kind of as simple as that.
And explain kind of the mechanics of, you know, the significance of what a U.S. listing means, because investors can already buy this company in other countries, of course. Now, U.S. investors will get access through ADRs later this week. How much bigger does the company get because of this?
Well, realistically, it represents proportionately, the ADRs represent a very small proportion of the Korean listed common shares. So while it's big, you know, in terms of the proceeds raised, and they'll use that cash for really interesting reasons, it is accounting for what is basically a lack of liquidity in a Korean market and availability there, but also like maybe just testing the waters a little bit.
Yeah.
You know, giving them something but not everything. SK, you know, it's kind of an interesting market because high bandwidth memory is just DRAM, which is pretty standard memory layered on top of each other. And what's happened is we've come apparently by surprise to a world where we don't have enough. It's just that SK would argue it kind of pioneered the technology a bit. And so in the first instance, it's been able to work with NVIDIA in a greater way than Samsung or Micron have, and is able to say with pride, like, our technology is kind of what's driven this to this point.
Right.
The stock in Korea has not reflected that kind of leadership position.
I get where they're coming from. I have to say, Ed, though, it makes me wonder, is it a sign of a top in just everything that's going on here, or is it just the reality and demand and need for memory?
So interesting and academic debate. You know, one of the rationales for SK doing this is not just to raise proceeds to grow their capacity. SK feels that they trade at a discount, a valuation discount to Micron and Samsung. To answer your question, the difficulty is that right now we've seen a huge run up in memory stocks because the thing they sell, supply is tight. But on a sort of valuation perspective, they trade very reasonably.
Right.
relative to historic norms and the rest of the technology sector. And so the question is, well, do they continue running up in that way? Does investor enthusiasm for memory names keep going? Well, if you just do it based on fundamentals, forward 12-month earnings, then yeah, there's every argument that they could.
Okay. Yeah, I'm taking a look at the Roundhill Memory ETF. The ticker is DRAM, DRAM, 22 billion in assets. Did I say it wrong?
So about
DRAM.
7 years ago, I said DRAM in the San Francisco
newsroom. What you might have is a dram of scotch or something.
No, DRAM. And also, like at that time, shout out Bloomberg's Mark Gurman and Ian King. This is true story. I'll find the tape and post it on socials. I said it at the newsroom, Cam DRAM. And their entire row stood up and went, DRAM, while I was live on TV. So
that's Bloomberg in a nutshell.
Yeah, it is. Yeah.
We love you, but we want to make sure you have it right.
Keep going. Right. I didn't mean to interrupt you. I'm sorry.
No, thank you. I mean, this has just been guzzling cash. Over the last couple months, it's 22 billion is huge for an ETF. And I think
in terms of flows, you mean people have been going into it?
Yes. And the assets now at 22 billion, just a signal that retail investors want to get in on this trade. It's not showing any signs of slowing down, at least just yet.
Yeah, so historically, memory chips have been cyclical. They've been boom and bust. Memory has found a home in consumer electronics, your computer, your smartphone, your video games console. And when consumer demand tapers off for those consumer electronics, so does the pricing and demand for memory. This time it appears so far to be different. It's kind of a straight line up because they keep telling us that demand outpaces supply and that situation continues over a multi-year horizon.
I love that you went there. And I'm sure you've had conversations with Ian King out there on the West Coast.
Yeah.
Like this whole idea of, is it different this time? Or is it just, again, we're seeing semiconductors, which we know have these cycles. I know I say this over and over again, but there is that incredible demand, and then there's the build out, and then there's a glut. Yeah. And then you see these names come down. I mean, 3 years ago, I think Ian keeps reminding us, memory chips were in the dumps.
Yeah, so the interesting thing about DRAM is it's almost like a commodity. It has a spot price that one can track. You can do it through the Bloomberg or just on any available public data. But in the real world, the tension is in Micron, SK Hynix, and Samsung being convinced to fundamentally alter the footprint of their production, build chip fabs for memory, which are billions and billions of dollars and take time. What happens if they do that and in the end it is cyclical? And they've done all this investment for what reason? Now, Jensen Huang, the NVIDIA CEO, would argue, well, I told the memory chip makers 5 years ago that this would happen. And it's a case of I told you so. And so if he is to be believed, as he in other parts of the AI market, he's right, then they should have already done the expansion.
I'm glad you brought up NVIDIA because it was on, I was reading in this morning, and it says, NVIDIA said, our roadmap is intact. That was a quote after a report on a server delay jolted tech shares. That was overnight in Asia. Where is NVIDIA in all of this, Ed? Yeah,
so really structurally important. NVIDIA-based architectures for AI, for training and running AI, use GPUs. GPU-based servers use DRAM, high bandwidth memory. So for one GPU, there's a corresponding number of HBM chips, typically 8 per GPU. That's not the only technological design. So one reason Cerebras, for example, has found some momentum is it doesn't use high bandwidth memory at all. Okay. It's able to argue that it's insulated from the tightness in that market because there's no HBM at all in their server. So NVIDIA would say okay, it's an issue insofar as when supply is tight, the pricing of HBM memory is high, but the pricing of NVIDIA chips is also very high. They have pricing power is the point.
All right, listen, you're going to stick around because we've got an interesting guest coming up. Ed, of course, is the host of Bloomberg Tech. He's going to stay with us because we're going to get into why is everyone, though, seemingly starting to hate on some of the chip sectors and pull back. We've had a couple of guests that were on air. You'll hear from them about kind of saying the focus now is really on hyperscaler. So we're going to get into that. It all has to do with the changing narrative around AI. We've got a good guest. Ed's going to stay with us. We're going to continue this conversation. Emily and I are back in just a moment.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We do have the S&P 500 index trading at the best level of the session right now. The S&P is at 75.42, gaining 59 points, up by about 0.8%. The Dow solidly in the green once again, up by 0.1%, while NASDAQ is advancing 1.2%. The NASDAQ 100 index doing a little bit better, up now by 1.4%. And the Russell 2000 index of small cap shares higher by about 0.8%. We are seeing a rally in several tech giants. They are lifting stocks amid speculation that the AI trade that has powered the bull market does have more room to run. The stocks, the Philadelphia Stock Exchange Semiconductor Index up by 3%, with a VIX below 16 and a 10-year now at 4.48%. We've got the 2-year yielding 4.12%, the 30-year right at 4.99%. Gold lower by 0.4%, 41.60 the ounce, while West Texas Intermediate Crude trading down by 0.3%, 68.50 a barrel. Brent 71.96, barrel of Brent down by 0.2%. Job cuts at a major tech company. Microsoft's Xbox plans to eliminate 3,200 jobs, roughly 20% of its staff over the next year, all part of a massive reorganization to spur growth in the struggling gaming division. Microsoft shares today, they are trading down by 1.2%. Recapping, NASDAQ up 1.2%, the SOX gaining 2.9% with a 10-year 4.48%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. Well, it feels like folks are homing in again on the hyperscalers. Feels that way, at least based on some of the Wall Street chatter. Just this morning, two voices on Bloomberg Surveillance weighing in on why it might be time for the hyperscalers to shine again. Here's Max Kettner. He's Chief Multi-Asset Strategist over at HSBC Holdings on Bloomberg TV's Surveillance. Again this morning, Mike Wilson, who leads Morgan Stanley's team of strategists, he also joined the surveillance team again this morning.
Given that drawdown in the hyperscalers, the expectations now are much, much lower. We're starting from a much, much lower base. I do worry that people once again are too neutral, a little bit too much on the sidelines, too worried about things going wrong. And actually, we are getting a bit of a summer melt up into July and August.
I expect the hyperscalers now to stabilize. That's what's going on in the last couple of weeks. And the semiconductor stocks are going to correct. That's a good development. That doesn't mean the CapEx cycle is over, but that ebbing and flowing between the two is a natural kind of governing factor.
Just some of the things that make this market so interesting. That Max Kettner over at HSBC, Mike Wilson of Morgan Stanley, again, earlier on Bloomberg TV Surveillance. Everyone watching the run-up in chips, we just talked about with our Ed Ludlow, SK Hynix getting ready for its U.S. listing on Friday. We want to get into, though, what we feel like is the evolving AI story. Ed is here with us in studio, and then we want to bring in longtime investor Rudina Seseri. She's founder and managing partner at Glasswing Ventures. She invests in companies where AI is the core architectural foundation, and so she's been thinking about the next generation of winners. She joins us from Boston. Hey, great to have you here, Rudina, with Emily and, of course, with Ed. I'm curious about how this conversation around AI continues to evolve. We are now talking so much about the memory names. How do you see it?
Well, hello, Carolyn. Good to see everyone. I think fundamentally we are seeing the overall demand for AI-related infrastructure and all the way up to the application layer continue to be strong. And in my view, the shifts that we are seeing in the market sort of reflect the scarcity or overestimation of scarcity along the value chain. So on the point around NVIDIA and others, are we seeing the correction because we expected more scarcity? While on the hyperscalers, are the valuations coming back because it's becoming a lot easier to track the sources of revenue that these players will have? And oh, by the way, we think of the hyperscalers as that sort of fundamental layer, the software infrastructure layer, but each of them are much more vertically integrated with their own chips. So in many ways, we're seeing the market move toward vertically integrated players from the chip layer all the way to the foundation models rather than just the CapEx spend. I don't know that we're out of the CapEx demand. I think that's a multi-cycle, multi-year level of demand. I do think that perhaps we're correcting a bit for the overestimation of scarcity.
You mentioned revenue, and I'm curious, Rudina, if you can talk a little bit more about just how critical it is for investors like you to be able to pinpoint whether the spending on AI is actually translating into tangible revenue and whether we've seen that yet.
Thank you, Emily. I think it's interesting because I'm a very early stage investor. So I often say I back to brilliant researchers out of the lab and we build out a monetization plan. If anything, I would bifurcate between the next gen application layer AI companies, where not only are we seeing revenue, but the scale from zero to multi-million, hundreds of millions is a matter of months rather than a matter of years. So if anything, we are seeing acceleration. Now, beneath that, two fundamental questions. Why? Is it because, especially on the enterprise side and even consumers, we are all experimenting and trying a lot of things? Thus, is the revenue sustainable or is it a leaky bucket? Second question, though, is really pertaining to the adoption of AI more systematically. So having moved beyond the, I'm going to experiment with this in-house build tool or with a chat function of Claude or ChatGPT, to something more serious. In that case, we're seeing demand for AI products to become much more of a important component, not just to the tech stack of enterprises, but to their actually business models and go-to-markets.
Rudina, what's interesting about what you and the team at Glasswing are looking at, it's so timely for today with this Morgan Stanley hyperscaler story. So you are looking at AI native SaaS, various layers of the software stack. Every time I speak to one of the CEOs at the hyperscalers, I always ask them, you seem to be pitching and working on the same kinds of technologies that your customers already do. So how do you respond to that? The idea that the hyperscalers, the cloud computing companies, let's call them what they actually are going to want to offer the same tools that you might back at that early stage.
So thank you, Ed. The underlying question is, where is the moat for the startups relative to the incumbents? And I think the moat depends. Some of it has to do with, vertical plays. I recently backed a company called Modern Industrials. They are developing an end-to-end demand planning for distributors of lumber and building materials. Very, very specific, tens of billions type of opportunity a year in terms of the revenue they can generate. But if Microsoft or Anthropic or OpenAI are going to that level of specificity, we have something to worry about. By the same token, who will be their customers? So they have to draw a line, to your very astute question, around where am I going to stop competing with my customers? And, oh, by the way, is there value in being highly, highly specialized? My view is that there is, and the value doesn't necessarily lie in the models. It actually lies in the highly specific, albeit not as broad data sets, which then, deliver much, superior outputs.
I would say if I'm pharmaceutical maker or like in the medical field, right? And I would say that I want a data set that I'm going to play with and that's very related to my field. I don't need to know about the rest of the stuff that some of the large language models are doing.
Yeah, or they
100%.
Or Rudina, something you said a moment ago is really interesting. You are backing not companies necessarily. We'll work out the business plan later. You're backing the researchers out of the lab, and that applies at the late stage as well, right? The founder-led thesis. But those people also have specialisms, right? Does it matter to you if they have a core team of not just computer scientists, but in biology, biochemistry, etc.?
Yeah. So let me parse what I intended with what I shared. In the case of the Modern Industrial, I'm very much going in with a very clear understanding of how it's monetized, what's the ROI for the customer. So in many ways, that's extremely tangible and very clear around the TAM, pricing, competitive dynamics. My earlier comment related more to what I would call frontier tech. So we have already achieved what we have achieved with the large language models. What comes next? We backed a company called Recursive AI. It's about the models correcting themselves to get around the next set of issues like hallucination and other problems that the large language models have. There's a whole paradigm of neo labs and new researchers that are bypassing in many ways the capabilities of the current incumbents. Think about Liquid AI, multi-billion dollar company. They're actually doing all the processing at the edge. It's actually a whole different sort of way to bypass the need that we currently have on compute. So in those cases, you solve one of the compute problems or the energy problem or the the performance of the models, and then you worry about monetization. So it's not pie in the sky, I'll beg these smart people, and someday they will deliver something. It has a purpose, but you might not know the pricing. Kind of like how many of us would have guessed that pure consumption pricing was going to be the model? Does that make sense?
What one contemporary difference, though, is that group of 3 or 4 people can raise $1 billion out of the gate or several $100 million seed round at crazy valuation based on the value of their own intellectual capital. How does Glasswing even participate in early stage valuations like that?
Very good question. So our core product is actually, the more typical pre-seed seed stage rounds. We have a pool of capital and a product called access checks, where we write, small $1 to $2 million access checks in these gigantic rounds to have a seat at the table, to have a seat to the ecosystem, to support the founders and participate with those that actually make it big. So while our core checks are focused on building the companies from the ground up in the more typical fashion that you think of early stage venture, we absolutely get access to the big guys, and it's important. There are benefits for both.
Hey, speaking of the big guys, I just got time for maybe 1 or 2 more last questions. I'm thinking about SpaceX, which does go into the NASDAQ 100 at the end of trading today. XAI, what's your thought about that company, which seems to be, to some extent, coming from behind, but it's got certainly deep, deep pockets?
It's emerging more and more. I think, in many ways, I think of Elon's companies as all being intertwined with one holding, and the holding being Elon himself. I think it will be interesting to see what he does with XAI vis-a-vis SpaceX, and maybe even what happens with Tesla eventually. They are catching up. I think performance has improved, and to be perfectly honest, in the circles that sort of are leveraging the most cutting edge models, XAI is starting to become a real contender. Definitely coming from behind, though.
Are people are talking more about XAI?
Yeah,
increasingly, a lot more than before.
Increasingly because of Cursor, right? Like the Cursor acquisition moving so quickly, people pay close attention because it's such a widely used tool.
All right.
And yet, even with Cursor now, the next generation saying we've bypassed Cursor. So things are moving so very fast. I go back to what becomes sustainable versus what is the flavor du jour. We shall see.
And it's fascinating too. Rudina, thank you so much. Rudina Seseri, founder and managing partner of Glasswing Ventures. We always appreciate your view. I have to say, Ed, more and more conversations I have with folks where companies are using a lot of different LLMs. They're saying they're starting to get more discretionary in terms of who's got access to what, because there is a cost.
Well, real quick, the reason people loved Cursor is you could swap in Anthropic, OpenAI, Gemini model and change it. Now Elon owns it. They're going to be allowed to do that? It's a big question.
It is a big question. Hey, listen, I'm so glad you're here this week. We're going to reach out to you a bunch. Sure. Of course, our Ed Ludlow. Catch him on Bloomberg Tech, 11 a.m. on Bloomberg Television. Coming up, when we come back, we've got to talk a little bit about oil and the catalyst, Saudi Aramco. That's coming up next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, all advancing right now. We're looking at a rally in several tech giants. That is lifting the overall market amid speculation that the AI trade that has powered the bull market does have more room to run. Right now, the S&P is at 75.38, a gain of 55 points, up by about 0.7%. Dow Industrials now higher by 61, up 0.1%. NASDAQ up 1.1%, with the NASDAQ 100 index up 1.3%. This with the SOX up by 2.6%. That is the Philadelphia Stock Exchange's semiconductor index. The VIX right now just below 16, with the 10-year at 4.47%, the 2-year 4.12%. And spot gold now down $11 the ounce to $41.64, down by about 0.3%. West Texas Intermediate crude oil down 0.3 now, $68.49 a barrel. Brent, the global benchmark, $71.94, down 0.2%. Keeping an eye on Bitcoin at 63,746 on Bitcoin, up by 1.7%. Michael Saylor's strategy did sell 216 million of Bitcoin last week, marking the first major step in the financing overhaul that the company unveiled in recent days. Shares of Strategy, formerly known as MicroStrategy, up now by 0.6%. Again, recapping, S&P higher by 57, up 0.8%. The Nasdaq 100 index rallying by 1.4%, with the SOX up by 2.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, Charlie there with a market update. Hey, among our most read stories on the Bloomberg today, Saudi Arabia making big reductions to its main crude oil price for buyers in Asia, selling barrels at a discount for the first time since it embarked on a price war in 2020 as a surge of global supply is heightening competition to find buyers. State producer Saudi Aramco will lower Arab light oil for next month by $11 a barrel to $150 below the regional benchmark. This is according to a price list that they put out today. The retreat, though, underscoring the speed that we've seen with Persian Gulf producers that have really ramped up flows through the Strait of Hormuz after an interim U.S.-Iran deal. I mean, this is something, Emily, I think it happened faster than we thought. Mm-hmm. We've seen either more oil come out on the market. I think we were concerned about the repairing, the rebuild as a result of the U.S. war in Iran, but it does feel like there's a lot more oil that's come through.
Yeah, and you're seeing there was already pressure on prices already after the ceasefire. Mm-hmm. Oil prices were coming down. You have to wonder how much more now this is going to weigh on global oil markets. And I think we have a perfect guest to talk about all this, Carol.
We have a great guest. And we do see both WTI and Brent crude slightly lower today. Both have slid about 30% since mid-May. So we've seen quite a pullback. Dr. Ellen Wald is the voice that we wanted to talk to. She's president of Transversal Consulting, senior fellow at the Atlantic Council. She's also the author of Saudi Inc. It was published in 2018. It detailed the history of what is, I don't know if it still is, the most profitable company in the world. We're talking about Saudi Aramco. Ellen is with us once again at Boca Raton, Florida. Ellen, you are the voice that we wanted to talk to. What's your read on this? Is it a surprise? Does it make sense in terms of what we're seeing out of Saudi Arabia and Saudi Aramco?
So I think it's interesting, mostly because Aramco has traditionally done most of its business, in Asia in long-term contracts. So they've got long-term contracts for crude with Chinese refineries, Chinese petrochemicals, Korean, Japanese. They've got a lot of their kind of long-term contracts. They've got that basically locked out. And so what we're really seeing here, I think, is a very temporary situation in which there's a lot of crude oil that needs to move out of the Persian Gulf, basically to get things unplugged and get things moving again. So you had oil that was sitting in tankers, that had already basically been, bought, that was just waiting to go. And we've seen a lot of that start to get moving out of the Gulf. But now we're seeing oil that's basically sitting in storage tanks onshore storage that also needs to get moving. And they've got to get this stuff moving in order to get back to, what we call normal business. Remember, we're also seeing, a lot of declines in terms of gasoline, diesel, and other petrochemical and other petroleum products in the Middle East. They've got to get this stuff unplugged so that they can get back to selling these other cargoes as well, if that's possible, to move them out of the Strait of Hormuz. And so the lower price, I think, reflects a lot of that backup, that they've got to lower the price enough to make it to make it likely that Asian buyers will snap up these cargoes, and also to make it worthwhile to charter a tanker to go into the Persian Gulf, collect this stuff, and get out, because that is in no way assured. That process is still very much up in the air. And so I think that this is not necessarily something that we're going to see happen in the long term. This is a temporary thing just to get that market unplugged, so to say.
Okay, so you have to imagine, though, right, that if one producer is cutting prices, that's going to weigh on global oil markets more broadly, right?
Exactly. And it is weighing on global oil markets more broadly, but it doesn't necessarily indicate that we're in some sort of oil glut. It's sort of like there's a glut in the Middle East because there's a backup getting things out, and that does impact prices all over the place. But for example, someone who's trying to sell oil in, say Houston, or sell it in the Gulf of Mexico, isn't going to have the same tanker issues as someone in Saudi Arabia. So they can command a higher price, not necessarily as high as they would like to on the market, but because what's going on in one place does affect prices elsewhere, but they don't face the same issues getting a tanker in and out, for example. So we're really just seeing a lot of disconnect in the market. We're also seeing these issues with gasoline and diesel. Gasoline prices are much higher than oil prices would indicate they should be. And that's really because, we don't have enough refining capacity for the oil. And so they can't reduce their prices until either we get all of these kind of kinks worked out of the system, or we see more refining capacity come online.
So, Ellen, it isn't like a bigger story of Saudi Aramco, or are they as powerful as they were when you wrote that book back in 2018?
They're extremely powerful. They've made a lot of money off of this crisis. I mean, it's not ideal for them. Okay, they prefer to have oil prices fairly stable. They prefer to sell their oil and deliver it to their customers with great regularity. They would prefer not to have had to have cut production. But overall, this price cut is probably not seen as a major blow for them. I mean, there was a point where they were selling cargoes for over $140 a barrel. Mm-hmm. So they've made plenty of money. I think what they'd like to do is get things back to where they were. They'd like to be pumping more oil, producing more products, selling those cargoes on, get the supply chains running again. And if they have to cut the price on their oil to get it out there, to get China to buy it, to make it worthwhile for China to buy it, just so they can, fix the plumbing, so to speak, then they see that as worthwhile. Because they're in it for the long run.
Right. How long does it take to get the plumbing fixed, essentially? Like, are we talking about a couple weeks here?
Have you ever tried to call a plumber? It just takes a while.
That is definitely the question. It could take several months. It could take less. The market is incredibly resilient, but it also depends on a lot of factors, such as whether China is going to be enticed by these lower prices and willing to, remember, China cut between 4 and 5 million barrels that it was importing. Is China going to say, hey, these are great prices, so we're just going to, send those tankers in and, whatever happens, we'll see what happens. We're willing to take the chance because the price is so good. Or are they going to be more hesitant? Are they going to get back to, producing a lot of gasoline and selling it around Asia, or are they going to be more hesitant? That's definitely one factor. And so the same thing is with Iran. Are they going to clear the mines from the main corridor in the Strait of Hormuz, and will that be able to be used reliably, say, in a month? Or are we stuck with these, Iranian northern lanes and American southern lanes?
Ellen, I have to jump in just because we got 30 seconds left here. I am curious about China because they are, of course, so important in terms of being a buyer of oils, and in particular Iranian oil. But they have showed that they want to move towards make a greener transition even more quickly. And this has happened before, where nations don't want to be dependent on another country for oil. And China doesn't make its own. So are we just going to see more of that? Just quickly.
Well, I think we've seen that China is not dependent on foreign oil for necessarily. They managed to cut their imports by a lot and still maintain economic function. But I don't think the answer is because of green improvements.
All right. Good stuff. As always, thank you so much. You're a gem. Thanks for coming on this Monday. Dr. Ellen Wald, president of Transversal Consulting, senior fellow at the Atlantic Council. Her book back in 2018, Saudi Inc. Hey, when we come back, we're watching the markets and we're watching stocks on the move. Emily Graffeo and I, back in a moment.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are getting ready for the last hour of trading here on this Monday, July 6, 2026. Carol Masser, Emily Graffeo in the house. Tim is off this week. Just a quick check on the trade. We're actually moving up towards our highs of the session here on the S&P 500. So we are up about 60 points, good for a gain of 0.8%, slightly higher on the Dow. And then the NASDAQ 100, really some outperformance in terms of the major indices, but off its best levels of the day. Emily, still up 409 points, up 1.4%.
This idea that the AI trade that has powered the bull market for how many of the last years, Carol?
3 years.
3? 4?
Yeah, we're getting ready for the 4th year, right?
It has more room to run. That is at least the idea permeating through markets today.
I always wonder, listen, you've covered markets, you're now doing a lot of stuff on private credit. I always wonder how much is FOMO, like not wanting to miss the gains, or how much is reality. You look at, this is where earnings are so important. We get fundamentals where we see demand, and so the cycle continues.
Yeah, a lot of times with new technology, it's very hard to kind of parse out. Is this, is this the top, or can it keep going for years and years on end? That's certainly one of the biggest questions on Wall Street.
Exactly, but semiconductors once again rallying in a big way. We're going to get to that in just a moment. I'm Carol Massar along with Emily Graffeo. Let's get to some stocks on the move. With us to do that, Bloomberg News equities reporter Avalon Purnell. She is right here in studio. We're going to get to maybe some chip names or a chip name in just a moment, but let's talk about, you've got some decliners in today's session.
Yes, we have to start off with O'Reilly. That's ticker ORLY, currently slipping.
And if we're lucky, Emily will hum the tune
Sing
for us.
the little jingle.
She will.
Not going to do the whole thing.
Oh, she didn't
Continue.
do it all. All right, go ahead.
I'm
O'Reilly.
Yes, those shares are slipping right about 6.1% today, most intraday since 2025. And that's after Bloomberg reported just last week that the firm has expressed interest in acquiring Genuine Parts Auto Parts Unit, which for those unfamiliar is Napa Auto. And to say the least, Wall Street analysts are very mixed about this. Mizuho saying that they see a very low likelihood that O'Reilly would be willing to take all of the Napa auto parts business and also the international portfolio, just given the differences in their distribution networks. Still, this is making O'Reilly one of the worst performers today.
Kind of rough.
Their description, Carol, on the Bloomberg DES page, the company sells its products to do-it-yourself customers. I don't know if I would ever DIY a car, but I guess some people are.
For me.
It's so funny. I was having a conversation over the weekend. My dad, he used to work on his cars. That's just what people did. You worked on things. He taught us all how to check our oil, keep track of our mileage. We used to have to record things. So, people did that. Cars used to rust out, too. They don't really rust out anymore. But there are people who do that. So, just FYI.
Dads, exactly. It's called Call Dad.
It's called Dad. All right, let's get to another decliner. Ticker is AMC.
Yes, AMC Entertainment currently dropping about 8.2%, and that's after box office sales for Minions and Monsters posted a weaker than expected numbers over Independence Day weekend. To be fair, this is the 7th film in this franchise. And
to be fair, it was so hot. I heard so many people going to the theaters because they wanted air conditioning.
Which is exactly what I thought as well. B. Riley actually writing that the franchise fatigue and also competition from Toy Story 5 is really behind why all of these movie theaters are just falling a little bit lower, as Independence Day sales just wasn't as good as expected.
Have you seen the 7th Minions, you said?
I have not.
Have you seen the 7th?
No.
Not sure if I've seen the 6th either, to be honest, though.
Yeah, I don't know that I've seen the
They
first.
just can't.
I'm sorry about that.
They don't know when to stop. Okay, let's finish on a chip name, a stock really moving the market today, Avalon.
Yes, that is Broadcom, ticker AVGO, currently up about 4.3%, most intraday in nearly a month. And that's after the chip maker agreed to develop and supply a range of custom chips to Apple. This is expanding their partnership through 2031. And Bloomberg Intelligence writing that this deal is also really helping to extend visibility on Broadcom's non-AI customer base.
There's nothing like working with Apple. I mean, they've been working together for a long time, but you see something and I feel like you get kind of, once again, the Apple seal of approval. It's actually something we're going to be talking about too a lot in the next hour. All right, good stuff. Avalon, thank you so much. Bloomberg News equities reporter Avalon Purnell. Be sure to check out our Stock Movers podcast, 5-minute episodes, big winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcast. We are going to talk, actually, with Mark Gurman coming up in the next hour. He's reporting on that kind of extended relationship between Apple and Broadcom.
Right, and also between Apple developing their own chips, but then also partnering with Broadcom to make a different kind of chips.
Yeah.
The chip trade is not over.
No, we're seeing it play out today as the stocks continues to rally. So it's something we're going to get into in the next hour. We're also going to get into the 10 companies to watch right now. I think it has something to do with Barbie, chocolate,
chips. But potato chips or semiconductor chips?
I don't know. So they'll have to
keep watching.
Stick around for that one. That's going to come up in the next couple of hours. We're also going to talk about what we've all been dealing with, extreme weather, the heat wave. And we get into why this extreme heat isn't the only climate impact shocking scientists, but that always makes me a little nervous.
Yeah, stick around, listen to that. And just taking a final look at markets before we close out this TV hour, Carol, S&P 500 up 0.8%. Bond yields not doing much. A little bit of movement to the downside for those longer end yields. Maybe on higher inflation concerns? We'll see.
Maybe. We do get Fed minutes on Wednesday, so we'll see how that all plays out. Yes, indeed. We've got the S&P moving towards its highs of the session. Stick around, an hour to go in trading. If you're watching on TV, the close is coming your way. We continue right here on radio.